Groundbreaking news. First time ever. Future price fatal. Negative U.S. interest rates starting December 2020. Wow. Well, not surprised on that. Factor in the budget deficit going to increase by 400+% this year. The national debt is over $22 trillion, and the unfunded liabilities, it's 200+ trillion. But back to the report. Now, the sale has broken. The euro-dollar market is starting to panic, sending the Fed funds futures soaring to contract highs, with the first priced in negative rate now shifting January 2021 to December 2020 in what appears to be the next market test of the Federal Reserve, with stocks, bonds, and now the FX starting to actually price in negative rates so soon as 6 months from today. Bug your lender to refinance. To refinance. Fast forward to today, when the U.S. debt is far greater, while the gross domestic product growth is, well, nobody really knows, but as of this moment, it is imploding and deeply negative. Gross domestic product is just another useless government statistic that could be highly manipulated by the government. Okay. The trade-weighted dollar is stronger than it was before the virus panic shocked, and is stronger than it was when the effective funds were more than 225 basis points higher last year. Another clear reflection of further need for policy easing is in commodity markets. Oil has nearly monopolized headlines, but are only part of the story. Hey, I wouldn't mind oil went to zero, go to 0 point energy, get rid of fossil fuels, make free energy, go with the Nikola Tesla. But that's not going to happen. Look who controls the oil, the energy. That's why. But back to the other parts. You got agriculture, commodities, and metals are significantly lower on the year. We could see this in break-evens. Yeah, from the Fed, blah, 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 blah. The conclusion is scary. Despite everything the Fed has done, print trillions upon trillions upon trillions, which is the base in a dollar more, having more ongoing wars with China, which includes trillions in explicit liquidity injections and implicit funding backstops. Not only does the Fed need to do more, but it would, in fact, have to cut rates to negative to offset pent-up market imbalances. Furthermore, national debt is at about 21+ trillion. Raise the basis points by 100 basis points. Your interest expense just on that would increase that interest expense amount by over 100 billion plus. Therefore, expect to see negative interest rates, or like Japanification, or what Japan did. Wow. What does a negative interest rate mean? Aside from the obvious death sentence for banks and a deflationary collapse for the global economy. Well, you go to other countries where they implemented negative interest rates. Banks actually pay you, all right, if you put your money into a bank and a savings account, you're paying interest to store your money, as opposed to taking a loan with negative interest rates. The banks are paying you money to lend for a home mortgage. brilliant on the homeowner on that part. We have okay.